Hello everyone, we are back again with the example of RSI support and resistance strategy. So now I've missed a good amount of time from when the market started, that is 9:15, and now it's 11:08 a.m. Okay, so I've missed few moves which I would consider to trade on the call side, and let's see. No significant move I see on the put side. Okay, so let me explain quickly what I have missed so that I can do some live trading session, live setup marking for you so that you understand how the RSI support and resistance strategy works in Nifty options. And this is the Nifty weekly options. Okay, so let's begin. By the way, I have put so many examples of RSI support and resistance strategy where I have shown how to buy when the setup is there, how to sell, how to short when the setup is there. Okay, there are 2 to 3 parameters that I look at, and those parameters are very important for me. It is the most important parameters for me to put any trade. Okay, so let's start with the RSI first. Oh, by the way, I'm working on Zerodha today. My last video was on M stock. So I also want you all to gain both the experiences of how M stock looks, how its charts work, what is the difference between M stock and Zerodha charts. We'll do that comparison also. That is also a very interesting topic to cover. Okay, so now here I see some resistance at the upper limit 60 of RSI. Okay, why I see this, let me mark this. Why I consider this, because if I take a path, now the RSI line, RSI movement went from the lower limit 40, it went up, it went a little sideways, it came down between 60 and 40, it went up again, but it wasn't able to push itself, and then it started coming down. Okay, and then this kind of resistance, the one that I've marked here, look here guys, the RSI section where my mouse cursor is moving, I'm making circles here. Okay, so this resistance followed by a candle, I mean this red candle. Resistance is equal to shorting, support is equal to buying. Okay, whenever we see or hear the word resistance, that means we should look for shorting. Whenever we hear the word as support, we should look to buy. Okay, now let me zoom in a bit, explain this candle. Okay, so I've explained why this resistance, now the candle. There's a good swing here. There's a gap between the EMA, the moving average, and there's a gap between the candle that is formed, and the candle has a bigger body than both the wicks. The red candle has a bigger body than both the wicks. This is called a trending candle. The next candle here is called a doji. There are only two candle types in the market, a doji and a trending candle. So this red candle which I have marked is a trending candle. The body is bigger than both the wicks. Both the wicks are not of the same size, but it's almost of the same size. Hence I am considering this. I have said this in multiple videos before. And now the third difference that I want to now the third thing that I want to tell you all is the gap between the high and the low. How many points are there on the line? Okay, how many points will I lose if the trade doesn't go my way? So the low is 180 and the high is 206. The low is 180 and the high is 207. So that's almost a 27-point gap. 27-point gap, and that risk taking ability should not be for beginners. You should not lose 27 points, or even if I say more than 10 points or more than 15 points in one single trade, because then it becomes very difficult to recover from that later. Okay, so ideally as a beginner you should not trade this. I have few other ways to trade these kind of candles if the setup looks good. Okay, I'll just give you a small brief about what other way I follow. Okay, so instead of taking the highest point and the lowest point of the candle, I take the closing point and the opening point of the candle. Okay, if the setup looks very good to me. If the setup looks very good to me and the difference between the high and the low is too much, then I take the closing and the opening point of the candle. So if we talk about the closing and the opening point, the closing is at 187 and the opening is at 204. 187, 204. So that's almost a 20-point difference. Okay. I would still avoid taking this trade because if I lose, then I will directly lose 20 points. Okay. So I wouldn't go for this trade, but ideally, if I would have placed this trade, then I would have gained, let's say 180, 107. What do you think, guys? 73 points of profit. 73 points of profit in a matter of 48, 50, 20 minutes. In a matter of 20 minutes, 78 point of profit. It's not only that. Let's come down. 70. 107 and 70. 100 points of 110, approximately 110 points of profit here. 110 points of profit if somebody would have taken that trade. See, ideally, this strategy tells us to be very stringent so that we don't lose unexpectedly. If you want to lose, then you lose, some calculated amount, some expected amount, right? Not taking too much risk, taking less risk, and still making money in the stock market. So that's what this strategy is about. But this strategy also sometimes gives you big money, big returns. But anyway, so this was one move that I would have considered. And if I would have actually done it using price action, then I would have taken this trade. Do you know why? Let me give you one more way of working on it using price action. Very simple thing. Trend line. Simple, guys. Price action, it's not only about the trend line. This is actually a trend channel, not a trend line. But yeah, so now talking about the current thing. Okay, current thing that is going on. There is a green candle here. So according to the trend channel, if I consider the market should again come from, see, now it's come down, right? It's going up. Now it might go up till here, or it might extend till here and then again come down, or something somewhat like this. Okay, so it's expected that there will be a short position here that one can take. Okay, but this is again a part of price action. This is not a part of RSI support and resistance strategy. So these are all the hints that I'm giving you all because I'm coming with price action series, and that will be exciting, in-depth concept discussions. I'll be drawing some things on the whiteboard for you all on the laptop digitally, but it's an exciting series, so watch out for that. As soon as the next setup comes, I will let you know. Keep watching. Notice how the market is telling us that the trend channel, the trend is still between the trend line and the channel. Correct. Let me draw a trend line as well. Let me shorten this for you all. Okay. Now let me draw a trend line. This was the bottom. See, ideally, as a price action trader as well, I will take a trade over here. Okay, I will actually take a trade here in this, on this green candle, because it is telling me that it's resisting on the trend line, perfect resistance on the trend line. But if somebody is not confident, then they can also short here below this candle. Now the part where you are entering and you are putting a stop loss, I'll explain that to you. Let's say this candle. Okay, this candle. The entry point will be 107 and the stop loss point will be 120, approximately 121, 122. Okay, so it depends, but my ideal candidate for entry will be this doji because it took a nice resistance on the trend channel. But we are still working on RSI support and resistance strategy, so just hold on for the right setup. Here I see some entry point here. Sorry, it is a bit late that I saw this chart. I was actually having my lunch. But anyway, let me mark this for you. This is a trade that I would have taken. This one. And at the RSI section here. So we see the same concept occurring again, same positive setup. Let me show you the path. It's coming here, moving in between the 60 and the 40 range. It came here and perfect resistance, right? Not a perfect resistance, but it is around the level 60. So we can consider it as a resistance point. And the candle here is also very beautiful. What we expect usually, the body of the candle should be the biggest. The upper and the lower wick should almost be of the same size, and here it is exactly of the same size. So if I would have shorted at 134 and the stop loss would have been 144.35, I would have sold somewhere at 120 or let's say 123. So that means a 20 point profit, and then I would exit, right? Uh, because here the big candle, after the big candle came, the next candle did not breach or did not go below or did not close below the previous big red candle. So hence I would have closed here, and that is the setup for today. Let's wait and see if I get some more setups to show you all in the live environment. Actually, what happens is that when I show you all the live environment, you become more confident that this strategy works, right? When you actually use this indicator, use the RSI support and resistance strategy to trade in the live market. So we'll wait for the next setup. Here, this is the call chart. At the put side, I still don't see any promising setup. I'm looking at the call side and the put side both, but I'm not getting any good setup yet. This looks like a good setup that is coming up, but till the candle is closed, I won't be able to confirm whether it is a good setup. So today the only good resistance point in the put side was this one, because we saw some resistance at around level 60 per level 60. So this was kind of good. The candle is also good. I mean, it's a full red candle. There are no wicks at all. And it is also closing below the low of the previous candle. It is not even crossing the high of the previous candle. So one of the ways, many ways to understand this, but what we learn is the most simplest and the straightforward way to trade using support and resistance. So I will take a trade here. I see that the points to lose is less than 10. So I will buy at the closing of this candle, that is 72, 73, and the stop loss will be at lowest 66. So 65.40 will be the stop loss, and the entry is at 72.5. So I have already entered the trade and now waiting for what it gives me. Now let me quickly explain this to you all. Why did I take this trade? Because the market came here, took some resistance, and then tried going up. And when it tried going up, when it took some support, I usually mix up these words when I'm recording. So this is support, not resistance. This is support, not resistance. So it took support near the upper level 60, and then it gave a green candle. Not a very suitable candle here, but the points that I put in this bet was minimal. So 65.40 is the SL and the entry 72. So the point difference. I mean, what I'll lose is around 7 to 8 points if I lose on this trade. But if I win, then I will have to see till where can I go. Let's say this is the high of the previous swing. This is the high of the previous swing. And if you want to see above that, so this is the next high. The EMA is rising and the price is expected to go up. I will exit somewhere between 78 and 84. We know what is the SL already. Price is going up. That's in my favor. Keep looking at the movement. That's why I'm doing it live, guys. It's so that you see how the behavior of the candles are when we place a trade, how the market starts moving, goes up, goes down, and try to find the possibilities, the probabilities of why this candle is going up. Okay, there are so many hidden things in each candle. There are so many hidden things in each candle. Each candle can be read and it can be analyzed as per the previous moves of the previous candles. I'll also mark a trend line. So till the price is not breaching this trend line, we are good. We should wait. If this candle or any other candle that is going to come ahead will close below this trend line, that means the price is going in the other direction. Okay, it's a probability that the price is going in the other direction. From a volatile market at the beginning of the session to a sideways market between 11 a.m. till 1:30, 1:40 p.m. Now it went up, and again this seems to be going a little bit sideways, where this is the mark that the price has to breach, where this is the mark where the price has to breach to go more further ahead. So the trend line has been broken, and the price seems to be coming down now. Let's look at the 1 minute chart just to understand what exactly is happening. Okay, so let me mark one more line here. Okay, and one line where I entered 72. Okay, see, ideally in a 1 minute time frame, you will see that it's a sideways market, right? Let's focus on the 3 minute time frame here. Okay, so the candle, the green candle, did not close in red below the trend line. Okay, it went up again and it closed above the trend line. So we'll wait. No rush, no hush, no push. Let's wait and watch. There's 1 hour left now for the market to close. Let's see where this trade takes us, whether it gives us our profit or it ends in a stop loss. We will understand that in some time. It can also happen that we close at break even. The reason is that if the market still goes sideways for some more time, I might exit at a break even as well. So instead of just waiting and expecting something, I'll take the message from the market that it's not going up, not going down, and get out of the trade. Probably tomorrow look for another trade. Tomorrow, by the way, is the 24th April 2025, and I'm going to trade the expiry tomorrow. So I'll try to record the entire session, but the entire session is like way too long, and for you to watch each and every move in that entire session is quite difficult. So I will show you only the entry points, where I'm entering, why I'm entering, and I'm going to explain that so that you get some knowledge out of that video, how to trade expiry days. And then probably if you want to do the same or trade an expiry day, then you can go ahead and adapt to that strategy or start practicing at least. As you see, this trade went on the opposite side and it ended in a stop loss. So it's almost 242, and I'm going to exit the market now because it's turning and going the other way, and I don't think so we'll find something so quickly, another trade. So let's meet tomorrow and do some expiry day trading. Excited to create a video tomorrow for you all for new experience. All right, see you in the next video then.